Welcome to the Brokers Lounge with Eddie and Carlo.
Hello and welcome to another episode of the Brokers Lounge with your usual hosts Eddie and Carlo. And this one we're going to be talking about the most recent RBA cut, which happened on the 22nd of May. And we'll just discuss its implications on your lending, borrowing, market in general, and bits and pieces here and there. But most important thing before we get to it,
I love the drum roll.
Carlo, how are you, mate?
I'm doing very well, Eddie. And yourself?
Always good.
Excellent. Good. It feels like it's been a while since we've been together and
it has.
Done the podcast.
We had a few guests in between.
Yeah, that's right.
You were away for a week.
Yep.
And before you know it, 4 weeks have gone.
Here we are again.
And here you come back with a full-on beard. And
it make me look more distinguished or a lot older.
it gives you a bit of a sophistication, I guess.
Sophistication. I like that. So
I'm rubbing off on you. Maybe I need to shave now.
I'm not cutting the hair back. I can tell you that much.
You never know.
I'm happy to grow this, but I'm not at that expense of this. So,
no, you never know. Never say never.
True, very true. Good to be back in the chair, that's for sure. So.
That's it. Good to have you back. We're going to be talking about the RBA's rate cut decision.
Yep.
Which bring us to 0.5% in cuts this year so far, which is good. Like we were discussing, and we had a few bets late last year. Yeah. So we're heading in the right direction.
Yeah,
we can now be in the light. We could see the light late last year. Now we're going through it.
Yeah, as we've always said, there is light at the end of the tunnel. We just wanted to make sure it wasn't a steam train coming through the other end.
100%.
It looks like there is some good light at the end of the tunnel, that's for sure. So,
but you know what comes after light?
Darkness.
Again, so enjoy it while you can. Sorry.
That song that starts off with "Hello, Darkness."
Hello, darkness.
So yeah, pessimistic for.
Oh well, look, it's just being realistic, I guess, and take things as they come. Like enjoy lower rates and take advantage of them, but nothing lasts forever. So,
good opportunity for people to get themselves really set up correctly now.
Yeah,
and
absolutely
on the right path.
So, new official cash rate.
Drum roll. 3.85%.
3.85. So that's the cash rate. That's the RBA's cash rate. That's not the actual interest rate you get on your home loan. Obviously, the banks add their buffer in there to just make a little bit of profit. Poor buggers, you know, just $10-12 billion profits a year. And they made that decision on the back of the economy, how it's going, and the trends in terms of inflation. We've seen inflation around the 2.5% mark month on month now for the last few months. Also, the unemployment is steady around the 4%, and they felt like it's the right time to take another rate cut just to incentivize the market again. And I think it's taken its effect already.
There's definitely that extra level of confidence now in the market, and we've seen it through activity as well and in inquiries. It's definitely it's probably good timing as well. You know, we're heading into the winter months. People get a little bit down on themselves as well, but this is a nice little kickstart to get things going again. So, it's nice. And, you know, the RBA did consider a 0.5% rate cut at their last meeting, but obviously felt not so much about the local numbers. It's more around the overseas impact and what's happening with all the different global issues happening. You know, the whole tariffs thing is still bubbling away in the background there, so we don't know how that's really going to affect things. So I think they've just obviously erred on the side of caution, which did not surprise me one little bit. For them to go 0.5%, I think, although people would have been really happy to see it, I think there would have been a lot more people just sitting there and going, well, okay, we're a little bit more nervous now because that could push things the exact opposite way that we needed to. So 25 basis points is a nice measured cut, I think. So
125 basis points at a time, I guess, is the smart, wise thing to do.
Yep, spot on.
Because like we went through the like harsh rate cuts during COVID, and yes, they are fun because you're paying lower interest on whatever mortgage or loans you've got. But then it's creating all this vibe in the background, which I'm not a big fan of, because everyone wants to do something.
Yep.
Everyone's got that FOMO of like, I have to do something now. It starts pushing prices back up again, and then everyone ends up borrowing more money than they need to, and we just go through the same cycle, which we have paid the price over the last 3 years for.
Yeah.
So I think, just finding the balance is the hardest part, especially with the RBA. They always try to find that balance, and unfortunately their data is like behind.
Yeah.
So they make a decision now, you'll know the effects of it in the next 3 to 6 months. And then to reverse that decision, that's another year gone. So there's a lagging effect, but I think it's heading in the right direction at this stage.
Yeah, and like you said, they do have that balancing act that they've got to, they've got to keep the company in a good financial shape. They've obviously got political pressures because we all know what politicians are like. They just do whatever makes it sound really good to the short term person out there. Yeah. Obviously, consumers are wanting rates to continue to be cut as well. Yep. Without understanding the true implications of it as well. So I get it. Like, sometimes I can be a bit harsh on the RBA and Michelle Bullock, but I just called her Bullock, Michelle Bullock. But at the end of the day, they're probably doing it in a nice measured way, and I think we will benefit from it longer term. Yeah.
So
probably a good idea to just talk through how it actually affects the everyday person out there that has a mortgage.
Yeah, absolutely. Obviously that means lower variable interest rates. So I guess most lenders have passed on the rate cuts, and you would have automatically seen your interest rate drop over the last couple of weeks, or I think all banks pass it up till 3rd of May. I think
that out of all the banks that we typically use, and
3rd of June,
there may be I think there's one more that's due to cut tomorrow. Yep. Which is weird to put it on a Saturday, but anyway.
Yeah. Which one is that one?
I think it might have been ME Bank off the top of my head. But pretty much every other lender has already gone through the cuts. Some pushed it through nice and quickly. Yeah. Others typically take that 2 weeks to actually put it through.
It takes time,
They take advantage of that extra, 0.25% over a 2 week period, and that's not chicken feed. I can tell you that much. When four banks, so
they go through. We talked about the process, how they do it. To go through every loan they've got and minus 0.25. So that would take them a couple of weeks to do.
So
but
there's a lot of whiteboards in the background. So. But it's also good for people. Don't get me wrong, there's probably not a lot of people coming off fixed rates. I think we've almost seen...
I haven't seen any fixed rates.
The end of that, what they call the cliff edge that we were going through. So I think most people have pretty much come off that already. But there might be still some trickling through, and they're probably going to see a bit more of a benefit compared to others who came off fixed rates in the last 12 months. So,
yes.
Because the gap won't be as large.
100%.
Having said that, a lot of the ones that are coming off fixed rates were some of the really good ones, like the 1.99. So they're still going to feel the pinch, but not as bad as what it was, say, over the past 12 months. So.
Absolutely. So if we run through some interest rates at the moment, what's the average variable rate?
I think prior to the rate cut, the average would have been sitting at around about the 6% mark for owner-occupied paying principal and interest. And I'm just talking very ballpark figures here to make it nice and round. So if we worked off a $700,000 loan over a 30-year loan period, repayments would have been typically sitting at around $4,200 per month. Now, with that extra 0.25% rate cut, that would typically drop that repayments down to about $4,085. So we're seeing about $112 per month lowering in repayments, which is great. Yeah. And we've always encouraged borrowers that if they can continue paying their old repayments, keep doing that, because one, the extra amount will go into redraw anyway, but two, it'll just set themselves up nicely. They'll pay down their loan a hell of a lot quicker. Interest costs will start to come down as well from that as well.
Absolutely.
So, but we do understand that people that have been living under pressure as well, so they may need to actually
take a breather.
Take a breather, take advantage of the lower repayments. Not every lender passes through the adjustment in terms of the repayments as well. So if you're one of those people that needs to reduce their repayments straight away, I'd suggest probably getting in contact with your bank directly and getting them to reduce your repayments. So
yeah. And if you add that rate cut to the previous rate cut, like that's $200 roughly savings per month. Yeah. So it's getting there. If we get another 0.5% this year, then it will be a lot easier. And before you know it, you've got $400 or $500 extra cash per month.
The other thing that we probably should have just highlighted earlier on as well with the rate cut in terms of how it affects probably first home buyers would have absolutely been rapt to see the rate cut come through, because every time a rate cut comes through, it increases their borrowing capacity even more. So, you see what that does from a repayment point of view. But on the flip side, they can potentially borrow an extra $50,000 for argument's sake. So, it's good for everyone. It's a win-win for everyone, that's for sure.
That's it. Well, the buyer's sentiment. So I think we've seen a bit of movement in the market over the last couple of weeks. Like, we definitely got a lot busier.
Yeah.
A lot of people are actually jumping on it, trying to do something now, because everything's pointing towards further rate cuts, more competition, more people trying to buy. So if you want to do something, a lot of people are making a move now. So there's definitely has been an uptick in offers being made and moves being made. So this, unfortunately, we know the other end of that will put more pressure on prices. Yeah. It will put more pressure on rental market as well. And prices will start to go up. Actually, like Melbourne, I think, had a uptick in values, in price values for the first time in 5 years, according to CoreLogic's report this morning. So it's all going to be heading back into, a bit of lifting in prices. Also, obviously, investors will start jumping back onto the market, because previously it wasn't very enticing to have an investment property because of the repayments. So as these repayments start dropping, then more properties are more neutrally geared or positively geared, or not as badly negatively geared, which can help. So everyone's just jumping back to it. And just like you discussed before, first home buyers now can borrow more. So that will open more options, more doors for them to make a move as well. So it will just keep going from here, I guess. That will put, like we said, more price pressure on especially main capital cities like Melbourne, Brisbane, Sydney. And auction clearance, I don't think we've got clear data on that, because it's just happened now.
Excuse me. I actually looked at it earlier on this morning, and there hasn't really been too much of an effect from auction clearance rates. And I'm only just looking at the Melbourne ones at the moment, obviously, because that's where we are. But they haven't really moved a hell of a lot since the RBA cut rate. So, but like we know with everything when it comes to these rate cuts, there's typically a bit of a lag effect, even with when it comes to auction clearance rates, because it takes a while for things to kick into motion, and then people put properties on the market, and a lot more buyers in the market as well. So, I think we'll probably see the true indication of auction clearance rates probably in the next month or so. Interesting time, because it's obviously we're going into the time of the year where there's not a lot of auctions because of the weather and everything like that. But
mate, we might see a different condition this winter, because it has been quiet. Maybe with the rate cuts and stuff, we might see a busy winter. Yeah,
and I think when you go back to that buyer sentiment we were talking about earlier on, I think it's people are jumping in now because I think they see it as, if I can get into the market now based on the current rates, and I can see that I can afford to do this, and I can get my cash flow right when it comes to this, building another 2 rate cuts potentially by the end of the year will put them in a very good position where they can sit back and go, well, you know what, I'm going to do the hard yards, a little bit more of the hard yards now for the benefit down the track as well.
Absolutely. because come spring, summer, we know how it's
to get in.
Exactly. And then with the rate cuts, then property would have gone, I don't know, 50, 100K by then. So definitely it's a good time to get moving.
Yeah, well and surely. Yep. I'm in the market, as they say.
That's it. That's it, man. That's it. Anything else to add there?
No, I think that's pretty much in terms of I guess what we've seen in terms of the market reaction. As such. So, but watch this space. I'm sure we'll have a little bit more to say on this as time progresses. So
absolutely. You want to name and shame the banks?
I was looking at the list the other day. There was a list published around which banks haven't passed on the rate cut.
Yeah.
And I have to tell you that all the names that were on there, I hadn't even heard of.
The ones that didn't pass.
That haven't passed on the rate cut. Okay. Yeah. So all the ones that you would most people out there would actually know, and the ones that we deal with on a day-to-day basis, and we deal with quite a few, have all passed on the rate cut. So it was just more around the timing of those rate cuts. But we're at a stage now where everything's pretty much flowed through. So,
well, I'm going to make this promise. Whichever bank that does not pass on rate cuts moving forward, we'll name him, I'll name him and shame him and try and avoid doing business with them.
Cool.
Because they're so quick in passing on rate increases, you know.
Yeah.
But then it's like with prices, like inflation's up, everyone put their prices up, and then inflation's down, no one put their prices down.
Yeah,
so,
I remember going back about 5 to 10 years ago where we were going through that whole process of, 1 month rates were being cut, next month the rates would be hiked, and it was the biggest bugbear of every consumer out there, because the minute there was a rate hike, every bank came out and said, yep, we're increasing by 0.25%, whatever it might be, and it's effective straight away.
Yeah.
And then on the flip side, when there was a rate cut, it was like,
silence.
We're passing it, but it'll be, some of them wouldn't even announce. Like now, I must admit that banks are getting better at passing on the rate.
Because they know people are waiting.
Yeah, they're announcing it quickly. They're just not making it effective straight away. But 2 weeks, not bad compared to where we were. I think it was a lot worse. Sometimes banks would take in the past, 1 to 2 weeks to actually announce the rate cut, and then another 2 weeks after that to actually implement it. So
I think anticipation and expectations were that we need that rate cut. Consumers needed that rate cut.
Yeah.
And the longer you wait, you're going to lose. Definitely, a lot of people would consider leaving.
Yeah, and we're in a market now where there's a lot of competition. There's a lot more loans written through the broker channel as well, and that's probably a good thing to quickly touch on as well. That broker introduced loans has hit an all-time record as well, so over 77%. So fantastic. But brokers have good memories as well. So if there's lenders out there who aren't passing on the rate cuts straight away or very quickly or at all, we remember them. And we'll continue to name and shame them as well.
Absolutely, man. And this is how it should be. And just transparency, I guess. And you're not trying to influence, you're just stating facts. And it's up to the lender. If they're doing the right thing, then we'll be definitely saying what they're doing. So,
So in terms of market expectations, what do you think will happen? What will play out over the next, what do we got, 6-7 months to go before the end of the year?
Yeah, look, I always say I don't know, but the way things are going.
You were burnt by a bet that you put on last year.
Well, we both were burnt by it.
You more than me.
So. I guess like things are looking towards more rate cuts.
Yep.
It's going to be more like we had a very tough stretch since COVID up till really last few months. Like it's been really tough. So I can see market conditions are about to change a bit, especially in certain markets and certain segments. Like Melbourne has had a very tough 3-4 years. So we might see some movement in the market here. Other capital states and cities, they've been doing okay. Like South Australia has been going wild, Queensland, Brisbane, like Adelaide, mainly Sydney and Melbourne, because they were already oversaturated in a way. So that's where a lot of investors exited the markets. So now we might see that turn around and, a lot more people coming back into the market, whether owner-occupiers or investors. Obviously, the global influences, which no one knows where they're heading or what might happen. There's a lot of uncertainty, but it is what it is. You can't, you can't guess because things change overnight.
Can't guess, can't control, nothing.
So I don't worry about it much. I just do what I can and, what you can control, I guess. Focus on what you can control. Economists forecasting, well, I love economists, but it's just forecasting and it doesn't mean anything. It doesn't, like a lot of times forecasts are changed every week or every month and they're completely different to what the forecast was because something new has popped up or something has changed. So I guess just focus on the positives in terms of rates reducing, more competition. If you can get into the market or if you're in the market already, see how you can improve your position by restructuring, consolidating, equity to buy another property, whatever that might be. that's what we're seeing currently. And yeah, just try to be in the market as much as possible for the longer time possible. That's the game, I guess. Other than that, hopefully things keep going this way until Christmas. And obviously we'll do updates, but that's
I
what I
think
see.
just if we want to just touch on the consensus amongst the market at the moment, which is readily available for people to have a look at, but typically most economists or market predictors out there are talking about 2 more rate cuts before the end of this year, and they were talking about in the months of August and November, which typically sees us with 1 rate cut per quarter, which I think I've mentioned in the past as well, was where the economists were pretty much looking for things. So it's currently playing out the right way.
Yep.
But like you said, things can change overnight. Like it won't take much for something to happen, and the RBA will go, well, okay, we're holding fire now, and we could not see any more rate cuts for the end of this year. So
100%.
Let's just hope everyone does the right thing in terms of controlling of their spending. There's obviously the property prices going up. It's going to be a real interesting one in terms of what that does to the market as well.
Yep.
Because that does affect absolutely everyone. You talked about Adelaide before, or South Australia, how their prices are going through the roof. And I've got family in Adelaide, and I hear them talking about it for first-home buyers. It's hard to now get a property. They're finding in the past they wouldn't have had an issue trying to find a property as a first-home buyer. Now they're in the position that we were in
5-6 years ago.
Exactly right, where they're
100%.
going, we can't get into the market. So that could potentially lead to issues in their rental market over there as well. So there's a lot of balls to juggle as well, moving parts.
Absolutely. Yeah, well, I think that briefly covers, everything in regards to the rate cuts and how things are going. Just a quick recap. Rates are going down. Prices are starting to go up. There's more competition. There's more people trying to get into the market. The sentiment is more rate cuts to come, which will create more pressure on the property market, whether it's buying or rental market. I really recommend people to constantly do a home loan health check just to ensure they are, being given the best rates, offers out there to see if there's any improvements that can be done. Because like in the last week, I've seen a lot of refinances come through, and there's rates that are still sitting around the 6.1, 6.2%.
Well, we had a client the other day who said they hadn't done anything about their rates for about 5 or so years.
It's exactly.
5 years. It's like using the analogy of, would you not have a health check or a medical health check for 5 years? Okay, Eddie, if you're healthy, it's okay. It's not so bad.
I haven't. I keep saying I should. But
as you get to my age, you need to have those constant.
But it's easier to deal with a broker than a doctor. So that's you can do it over the phone.
Absolutely.
But absolutely.
Totally agree.
100%. Like, be on top of it.
If you're not doing a health check on your
and it's free, no obligation.
That's right. Why wouldn't you do it?
Absolutely.
What's going to cost you a bit of your time? But we try to take away a lot of that legwork anyway for you. So it's just a matter of reaching out to your broker and just getting them to have a look at where your loans are at the moment and whether you can do actually any better for it.
Yeah.
It's going to be a win-win for everyone, that's for sure.
Absolutely. And we're here for it as well. So if you've got any questions, or if you just want to know where you stand, what's out there, any questions at all, we are absolutely here. Just reach out, send us an email, call us, whatever suits you. And as usual, please don't forget to subscribe, share, and rate the podcast. That will immensely help us in reaching out to more people and helping out more people. And if, like we said before, if this cut has you wondering whether you're still on the best deal or not, by all means, Carlo or myself are here at your service.
Yep, well and truly.
That's it. Anything else?
No, all good.
Enjoy your week, day, whatever time. Yeah. And until next time, take care of yourselves, and we'll see you soon.
Take care, everyone. Bye-bye.
Disclaimer. The information contained in this podcast is general in nature and does not take into account your personal circumstances.